Well, hello and welcome everybody to our first series of many of that Payroll Guy series. And today we're going to actually talk about the 2021 Child Tax Credit. Again, my name is Gerard Hall and I'm glad to be here, also known as that Payroll Guy. And I'm here to give you some great education on all the different things. Of course, as you probably have heard, the child tax credit is changing. You've probably heard something about getting checks and what that's going to look like. And so this presentation today is just going to simply go over what that looks like, who's eligible for getting these checks, and what that will do for the child tax credit when you get ready to file your 2021 return in early 2022. So today's presentation will be understanding the 2021 child tax credit. So just as a disclaimer, this presentation is purely for educational purposes only and is not meant to be a substitute for payroll benefits or tax advice. For advice specific to your personal situation or your whatever you have going on, you want to consult with your CPA or your tax advisor. So let's first start off with maybe you don't know what the child tax credit is. And so we're going to talk about what the child tax credit has been before we get into actually what is going to change for 2021. So the child tax credit is a credit for individuals who claim a qualified child on their personal tax return, also known as the 1040. It is a credit against the tax bill or the amount due that on your actual personal return. So we'll look at an example of what that tax credit would do. And prior to 2021, the maximum amount that you could get per qualified child, is $2,000. Now, what exactly is a qualified child? It is going to be a son, daughter, stepchild, eligible foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or descendant of any of them, such as a grandchild, niece, or nephew. The child prior to 2021 had to be under age 17 by the last day of that year in order to be eligible to receive that credit. The child did not provide over half of his or her own support. So again, you have to not only be holding that child, but you actually have to, they can't be supporting themselves. The child had to have lived with you for more than half of the year, unless of course you had the child in that year, which of course then that portion in which they were born, as long as they were available, that would be qualified. The child does not file a joint return of their own, and the child is a U.S. citizen. All of these stipulations or conditions have to be in place in order for you to be considered a qualified child in order to receive the child tax credit. The one thing to note is that when you have a child that's qualified, you must support and identify their social security number or their individual tax identification number when you go to file your personal return in order to receive the eligible child tax credit. So if you have a child near the end of the year and you have to wait, and of course until you get your social security card, if you file before you get that social security number, you will not receive the child tax credit. So how does a tax credit work? So one thing I want to make sure that everybody knows is that a tax credit and a tax deduction are not the same thing. A tax deduction is what reduces the income amount that's going to be taxed, whereas a tax credit reduces the overall tax bill that comes out when the calculation is done. So for example, a married couple with one child, if their W-2 income is $80,400, the standard deduction, and let's say they take the standard deduction of $24,800, which was for 2020, their adjusted gross income, or the amount to tax, is $55,600. Well, being a married couple at $55,600 puts them in the 12% tax bracket, and so the tax bill would end up being $6,672, and then the child tax credit for this eligible child would reduce that credit to $4,672. So that's how a tax credit works. So who doesn't get the full child tax credit? Not everybody is eligible. We're going to say high earners. Anybody who is considered a high earner by the governors of the IRS, or what I like to call a big baller, does not get the full tax credit, and they may get a reduced portion or maybe not even the child tax credit at all. So for single earners, if their adjusted gross income is over $200,000, it will start to dwindle down. And married earners over $400,000 adjusted gross income. That reduction is 5% of the amount over the AGI threshold until it is completely absolved. So in an example for the big baller, let's say there is a single earner who makes $212,000 adjusted gross income on their personal return. So that $2,000 credit is going to be reduced by the $12,000, which was over the $200,000, at 5%, which is equated to $600. So they would receive, in this example, $1,400 per eligible child. So now that we've discussed what the child tax credit has been, let's talk about what is actually going to change in 2021 for this child tax credit. You probably have heard this before, but it is part of the American Rescue Plan Act. This was signed by President Joe Biden in March of 2021. And as most of us know, as citizens, that's when we received our third economic stimulus check. However, within that plan, there are so many other credits related to individuals as well as businesses that help try to regain and restore our economy back to where it needs to be. And so there were expanded business credits like sick pay leave and family leave credits for employers, retention credits for employers, the PPP loans for businesses and individual or independent contractors. And then, of course, wrapped into this American Rescue Plan Act was the expansion of the child tax credit. So what does the expanded tax child credit actually look like? So for the 2021 calendar year, it now includes 17-year-olds. So as long as your child will be 17 on December 31st of 2021, you will be eligible to receive a child tax credit for them for the 2021 tax filing year. The child tax credit increased from $2,000, as I mentioned previously, to $3,600 if your child will be under 6 by December 31st at the end of the year, or $3,000 if your child will be 6 to age 17 by the end of this year. The one thing that it also did is it made the credit fully refundable. So previously, in 2020 and years before, if you had a tax bill, let's say your tax bill was only $200, but let's say you had an eligible child, which would have given you a $2,000 credit. Well, then that means you're $1,800 in a credit. Well, previously, before this year, you could only get an amount if your tax bill did not absolve the amount of up to $1,400. So in that example, even though $1,800 looks like a credit that I would get, you could only get the max of $1,400. Well, that has changed with the American Rescue Plan Act, and now the credit would be fully refundable. So let's use that same example in 2021. If I have a $200 tax bill after my calculations, and I have that $2,000, well, of course, it would be more, but let's just use $2,000. That whole $1,800 could be refunded and credited back to the taxpayer. And of course, the age is based on what age the child is on December 31st of the year. So even though you hear about a 17-year-old today, if your child is 17 but will be 18 before the end of the year, they would not be eligible for the child tax credit. Some thresholds with the extra credit. So just like the big baller status with the normal child tax credit, with this additional amount above the $2,000 has thresholds. You may not be entitled to some or any of the extra child tax credit if your adjusted gross income is over the allotted thresholds. So the AGI thresholds for this additional tax credit for single filers is $75,000. For head of household filers, it's $112,500. And for married filers, it is $150,000. So these are the same thresholds that were used for the stimulus check, for the additional, and this will be for the additional child tax credit. With the adjusted gross income, after the adjusted gross income, just like in the big baller status, you'll lose 5% of the amount of over the AGI threshold up to the entire $1,000 or $1,600 for the ones who would be getting $3,600 for those children under 6. The credits are based off of your 2021 income. So again, these extra credits, while they're going to look at some things that we're going to talk about in a second, it's going to be based off of your adjusted gross income for this year in 2021. A person who is over the threshold and may not get any of this extra child tax credit can still receive the $2,000 as long as they're not hitting those big baller AGI thresholds that we mentioned earlier of $200,000 for single filers and $400,000 for married filers. Now, as you have probably heard in the news and other articles and blogs, there's going to be an advancing of this child tax credit. So you've probably heard, I'm going to start getting checks for children beginning in July, and the answer is yes. So beginning in July 1, the IRS will advance half of your annual child tax credit in monthly payments. So from July through December, whatever your child tax credit is for the year, it will cut it in half and then give you a 1/12 of that each month. So until the end of the year. So it will be provided to those qualified in the same method as the stimulus payment. So what that means is the way it's set up is, okay, whatever was used for your banking information, unless you've changed it in the portal, that's how those payments will be had. So if you got your stimulus check by a direct deposit, that is how your monthly child tax credits, your advanced child tax credits will come. If it isn't a check, it would be in a check. For those who are receiving the full tax credit, so you don't hit any of those thresholds, you're not at the big baller status, and you're not at the other additional child tax credit status for AGI threshold, you will receive $300 a month per qualified child under 6. Because again, the amount increased to $3,600. Half of $3,600 is $1,800, and if you take that $1,800 and divide it by 6, that would equal the $300 that you would receive every month for those children under 6. If you have a child from ages 6 to 17, that's when you'll receive $250 a month. Because again, taking $3,000, dividing it by 2 is $1,500. Splitting that up 6 ways would be $250. Okay? Remember this, the advanced payments that will be happening beginning in July will be based off of your 2020 personal return. And if you haven't, and hopefully by July you have filled out and filed your 2020 tax return, if you haven't, it will then be based off of your 2019 personal tax return. Okay? So let's look at an example so that we can understand and make sure that we know how much money we would be getting each month from an advanced perspective for the child tax credit. So in this example, a married couple who, that has a 12-year-old, a 7-year-old, and a 5-year-old, and let's say their adjusted gross income is $145,000. Their total child tax credit, so not looking at just the amount that they would receive in a monthly payment, but the total child tax credit would be $9,600 for this family, because they would get $3,000 for the 12 and the 7-year-old, and then they would get $3,600 for the 5-year-old because they're under 6. Okay, so remember the monthly amount would be a 1/12 of that $9,600, which would equate to this family receiving $800 a month from July through December. Now let's look at an example where maybe they're going to get a reduced credit because they've hit an AGI threshold. So we're going to take a married couple here with a 12 and a 10-year-old, but their adjusted gross income is $165,000. Well, as you probably remember what I mentioned earlier, the married couple threshold to get the full credit is $150,000. So this particular family is $15,000 over the adjusted gross income limit. So what this will look like for them is the child tax credit, before we do any reductions, would have been $6,000 because both kids are over, 6 and over, and of course under 17, so they would have gotten $6,000, $3,000 per kid. However, we need to reduce their credit by 5% of the amount that was over the threshold. So $15,000 is over the threshold. At 5% makes that $750, and that's the annual amount. So the modified credit for the year ends up being $5,250, and this family would then receive $437.50 a month based off of how that reduction works. So hopefully that makes sense. Here are some warnings, though, and this is one thing I really want to caution you. Remember, with this child tax credit, you're receiving half of a credit. So remember, prior to 2021, the child tax credit was a flat $2,000, unless, of course, you were a high-income earner. So other than that, you would have received the $2,000. Well, now it's moved up to $3,000 and $3,600. But remember, we're giving that to you in advance, so we're giving half of it to you in advance. So for those, and this is why I have this document up here, if you have filled out a 2020 or later W-4, and in step 3 where it asks you to claim your dependents for the credit, and you've put that $2,000 there and you don't go and modify your W-4, you will be withholding and may not be withholding enough taxes, okay? Because remember, if you elect to get these, you don't have to elect to get these advance payments, they will automatically come. But if you're a person, let's say you're a person with a 6-year-old, that means you would have gotten $3,000. Your credit is now $3,000, but the amount that's going to be left for you to tax is only for the child tax credit come filing time will only be $1,500. Well, if your W-4 has the $2,000 amount, that means your company or your paycheck is not reflecting the new reduced amount because you're now getting it ahead. So I want to caution you, for those who have filled out step 3 to account for that $2,000, you may want to reconsider and maybe change your W-4, especially if you're wanting to get somewhat of a similar amount or whatever you like to end up with at the time of filing. But you're probably asking yourself, I have some special situations. So here are some things that I have heard in the industry, and I want to address those. So the first one, so with this person, let's say somebody is pregnant now. Well, congratulations. And they want their monthly payment. We'll talk about how that will work. Let's say you're in a position to where, let's say it's you and your ex or whatever, but you have a child together and, you switch years. So maybe maybe last year was the year in which that person claimed the children, but this is your year, but you're like, okay, well, wait, if it's my year, but they're basing it off of last year, then it's going to go to the other person. We'll talk about how that will look and what you can do there. In a position to where maybe you're making less this year and now you'll qualify for a child tax credit, okay? So maybe in 2020, you hit some thresholds to where you weren't eligible for the child tax credit, but now you will be because maybe somebody's no longer working or may have taken a reduction in hours. Or maybe the inverse. Maybe we are going to make more and that potentially be in a position to where, hey, if you look at last year's, I'm going to get the full credit. But if you look at our new salary, I'm probably going to need a reduction, and I need to reflect that so that I don't get overpaid and have to end up having a tax bill come 2021, at the end of 2021. Or maybe you just say, you know what, Gerard, this is great. I'm glad the IRS is doing this. I'm glad they're getting additional tax credit. I don't need the monthly payments. I have a suggestion of where you could send those, but let's just say you want to opt out. You're not interested. The IRS has mentioned, and this is coming soon, that before July, before this all rolls out, they will have a similar portal to what they had for the economic stimulus checks. So there will be a portal for you to go in and start changing information based off of this additional child tax credit. Okay, so if you need to change the bank account, obviously, in which these monthly payments need to go, the portal will be set up for you to make those changes. If you have a dependent change, so in that example where maybe you have split custody, if you have a dependent change, well, now the person who received the credit last year, maybe that now it's not their year, it has to be a two-step process. That person has to remove those dependents off of their portal and then allow you to be able to add those. Because again, this portal will look at social security numbers and make sure that people aren't duplicating efforts. So if you're in that situation where you get it every other year and you need to switch, it's a two-step process. Or in the first example I mentioned, you're getting ready to have a child in 2021. Well, there's nothing in the IRS regs that says, okay, you only get a prorated amount because that person wasn't existing the whole year. If you have a child on December 31st, that child is eligible for the full tax credit as if they had been here the entire year. So what will happen there is you can add that dependent to the portal to start getting those monthly payments, since in 2020 when you filed, that dependent wasn't eligible because of course they weren't here yet. The one thing to note with that though is you have to have a social security number. So let's say you had a child 2 weeks ago, you more than likely don't have a social security number assigned by the SSA yet. So you can't go into this portal and put in that information until you have a social security number. Again, if you have AGI, adjusted gross income, or income updates, you probably want to reference that. So maybe you're in a position to where you know you're not going to be eligible for the extra amount of the credit. Go ahead and put that in, and then that way you're not going to have an overpayment situation. Or, like I said, you're just in a position to where you say, I don't want it. I'm just going to take the full tax credit when I go to file. And that's fine. There will be an option for you to opt out, and then you would not receive those additional tax credits. So some last items to just clear up the child tax credit. First off, even this is an advance payment. This is a tax credit. Tax credits are not taxable. So don't let anybody come out here and tell you, oh, you're going to get this money for your children and you're going to have to end up paying it back. No, you will not. Okay, it is a non-taxable benefit, just like the stimulus checks. Nobody's coming back for you and saying, hey, we gave you this amount and now you need, now you're going to be taxed on it. It is not taxable. If all your information is correct from your 2020 W-2, 1040, and you have no changes that you need to make, you don't have to register for the portal. You don't have to do anything. The checks or the direct deposits will just start coming. Okay. As far as advance payments are concerned, for those who are in situations to where maybe you owe an agency for some back withholding or arrearages, advance payments are guided under the IRS, and the clause states that those cannot be taken or swept from you to pay past due federal taxes, state taxes, or any state debts, and in child support situations to where a non-custodial parent is in arrears, they cannot take those advance payments and apply it to that. So again, not taxable, and this is how it will all work.